Hello, this is Adam Evans with LongBeachLoanOfficer.com and Long Beach Home Loans, and I'm here today to talk to you about debt-to-income ratios. What are they and why do they matter? Now, a lot of people know what this is and a lot of people don't know what this is, and it's a very important tool. It's one of the major tools that we use in the mortgage industry in order to figure out how much loan you can afford. What's the amount? How do we figure this out? Well, let me teach you so that way you know. You could even calculate this at home and figure out your own debt to income ratio so you can get an idea of either where you are or where you need to be. So in debt to income ratios is a qualifying tool that takes a percentage of your total gross income you're making per month, gross, against your liabilities. And with debt to income, there's two different percentages or two different factors we look at. There's the front end ratio, and that's just your mortgage payment or your proposed mortgage payment against your total monthly income. And then there's the back end ratio, which is all your liabilities, including your mortgage payment, against your total gross monthly income. So I'm going to go through an example here and then talk about what's ideal and why debt to income ratios matter for us. So first, let's calculate the front end ratio. And we're just going to look at the mortgage payment of $2,000 per month, and we're going to say you have a total gross income of $10,000 per month. So it's a really nice job, and you're ready to go buy a house, and you're looking about $2,000 per month. That's your total mortgage payment, including taxes, insurance, principal, interest, and any other, maybe HOA, any other fee, any other liabilities that may be involved in your mortgage payment. So it's a very easy calculation. All you do is 2,000, the total monthly of your mortgage, divided by 10,000, your total gross monthly income, and we get 20%. So that's our front end ratio. Now our back end ratio is a little bit more complicated, but not much. And so what we do is we run a credit report, and we get all of your liabilities. And so each month, you maybe have a credit card of $200, another credit card with $300. You got the nice job, so you get the nice car for $800 a month, and then, to get the nice job, you have some student loans, maybe you have $500. So we add all that up, and then also take into account your mortgage. So if you take all of this together, you get $3,800 per month. $3,800. Now, just like the front end, we're going to go ahead and divide that by $10,000 per month and get our percentage of 38%. So now we have our ratios. What are our ratios? 20 front end, 38 back end. Now these are ideal ratios. Typically Fannie Mae on a conventional loan, especially after the new changes coming in January, are looking at about 31-43. They say ideal is 28-36, but a lot of the deals we're doing, a lot of the way the market is right now, 31-43s, I would say average for your 30-year conventional conforming loan. Now there are other factors that are involved, so always talk to your lender about, let your lender tell you what's acceptable and what's not, because different programs have different debt to income ratio requirements or acceptability. So you always want to talk to your lender about what your ratios are and what's ideal for the program you're looking at. But for general conforming 30-year fixed, you're looking at about 31-43. I'll write it up here. 31-43. So lenders use this as a tool to look at your gross income and your liabilities to make sure that you are able to repay the mortgage that you're taking out. So that is the general idea of debt to income ratios. If you have any questions or want to run your specific scenario by me, please contact me at longbeachloanofficer.com. And I'll be happy to talk it over with you, and we can figure out what your debt to income ratios are and how how much mortgage you can afford. So thank you very much for watching. This is Adam Evans with Long Beach Home Loans and longbeachloanofficer.com, and have a great day.